Hey everyone, and welcome to another episode of Blockchain Marketing Insights. Today I'm going to talk about not the market cap, which you can see here sits at around 122 billion on Coin market cap, and sits around the same on Coin Paprika. You can see basically the markets are down for the top leading cryptos. It's a mixed bag though, a little bit with XRP and Stellar and Litecoin beating the trends, and even Bitcoin SV beating the trends out of the top 10. So it's really a mixed bag. And that's actually leaving a little bit more up than down if you discount Tether. Right, so but overall it's a mixed bag, as you can see. This is quite normal for this time of the week on a Sunday, wherever you are, Saturday night, Sunday morning. And, well, early Sunday morning or late Sunday, it depends. If you're out in Australia, it's already whatever time it is. Anyway, the point is, this time on Sunday, Universal Time, we tend to see lows in the market. And then it does go up a little. And if it does that, again, it wouldn't be surprising if it stays low or even breaks lower. It also wouldn't be surprising. You know why? Because don't try to time the markets, right? So we've been over that before. So we're actually going to get rid of these two tabs from the topic of discussion, because that's not what we're talking about today. I'll leave them open, check in later. But we're not concerned about that as much as the fundamental stories that are actually making not just headlines, but changes in the ecosystem. And as you can see here, there are some recently activated Bitcoin whale wallets projected to cause upheaval. Pretty picture. Basically, the story is that there have been a number of crypto wallets that have been laying dormant for about a year, in some cases up to 5 years. And all of a sudden, recently, they've started to become active again. The increase is like 40% since the start of last summer. So those wallets, it's not just an increase in the number of tiny little wallets. It's an increase in the number of wallets that control about 60% of the total circulating supply. So basically the majority of the circulating supply was laying dormant for a year, between 1 to 5 years. Think about that. All right, 60% of the circulating supply now was laying dormant for 1 to 5 years. And that means that those are hodlers, right? Because they held during the bear market, and they, most of them held during the bull run, right? So what does that impact on the market? Well, to put it simply, it's a significant, something wrong here with the chat, it seems. Getting a YouTube message. If you all can see this, let me know. It says here an error occurred. We might have to try this again. Let's see. Yeah. Okay, there we go. I think we're back, but I'm not sure. So, yeah, well, hope for the best. We're going to start this again, and that's that. Hey, everybody. Well, I would just continue straight off from where we left off, but we had a little technical error, so we're going to kill that stream and restart. But we're going to do this real quick. In short, welcome to another episode of Blockchain Marketing Insights. Oh boy, the Blockchain Marketing Insights here. And the markets are sitting around 122 billion on CoinMarketCap and on CoinPaprika. You can see the coins are basically down over the last couple of days. But essentially they are moving sideways in the past 24 hours or so. They are very mixed, pluses and minuses all over the board. Some big winners you can see here. Repo up 36% right here. And Holo up 26%. And Hypercash. Anybody into Hypercash? Up 66%. Whoa, okay. So what's going on there? If you have Hypercash or know anything about it, please drop a note. We'll look into it as well. But overall, it's down. Oh no, Dentacoin down 17%. Oh my goodness. Remember to brush your teeth. And, you know, it's just up and down all over the place. But I'm really not here to talk about the prices today. I could not care less because it's, well, I could care less. Because if it dropped to like a penny for Bitcoin, I'd be all over that, right? But that's not going to happen. So that's not my concern for the day. I'm not going to look at prices. May come back to them later, but not necessarily. What I am going to look at is the big story here, that activated Bitcoin whale wallets have been projected to cause market upheaval, as reported by Toshi Times. Right? And this article mentions that a huge number of crypto wallets, roughly 60% of them, had been laying dormant for about 1 to 5 years, and they represent around 60% of the total circulating supply of Bitcoin, and they're 40% of the wallets. Suddenly they become active again in the last, since the summer. And what it means is that, there's also another reason, there's no reason, to expect them to remain stagnant for another couple of years, right? They will probably, once they're active again, they're probably going to start buying and selling again, right? What are they doing when they're activating their wallets? What are most people doing these days with their wallets? Buying and selling and trading. So that is a very interesting story because it speaks to the fact that we may very well be at or near a low. Who knows if we are or aren't. But it means, more importantly, that from a marketing point of view, the storyline, the story arc of Bitcoin is now reaching a nadir, right? And is about to start going up on an upslope. So the story arc has to begin going upwards. Part of that includes now the activity of a large number, 2/3, almost, more than, 60% of the value of the circulating supply now being reactivated, coming back online, saying, okay, the owners are doing stuff here. That's very important for the market, that the money that's in circulation doesn't only lie dormant, right? If it only lay dormant, it would be at best a store of gold or a store of value. Sorry, a store of gold. It would be at best a store of value and little else if it didn't ever circulate, right? Because how much do you walk around with gold in your pocket? It sits somewhere idle most of the time, right? Storing your value. Same thing with Bitcoin. If you don't use it, it doesn't really have much value. If nobody uses it, it has no value, right? So it's good. That's a good piece of news. From the marketing point of view, this is a positive development for Bitcoin and therefore for the other altcoins, Ethereum. Okay, well, do I call Ethereum an altcoin? No, it's another proper coin. But the leading coins and altcoins will surely benefit from this fact, because once you have active wallets, especially from people who have Bitcoin since at least 1 to 5 years, there's a high likelihood that they have some other altcoins as well. Therefore, you're going to see more activity across more altcoins, not just Bitcoin. Now, we also have here that the biggest, I think I haven't had enough coffee. It's basically another good news story. And the good news is that South Korea's KISA, which is the Internet and Security Agency, gave its leading cryptocurrency exchange, BitHum, or BitThumb, or however you pronounce it, a very important certification, right? It means also that CoinCheck, which is the largest exchange in Japan, also registered with the country's financial services agency. And this means that you now have two of the leading economies in the world, right, giving their approval to leading exchanges in their country. That is massive. Right? For any other industry, for any other niche, for any other asset being traded on traditional stock markets or commodities or bonds or whatever, that's a big deal. That's enough to move markets a few points here and there, at least. In crypto, when we're in the crypto winter, as they're calling it, it is not necessarily enough to wake everybody up to the fact that this is huge. Right? This is, in some respects, as big as something like Backed. Right? These are actual governments saying, yep, okay, your exchange is fine, trade. In some way, it's just as legitimizing as the New York Stock Exchange opening up Backed, because the New York Stock Exchange, as great as it is not the government, right? They're regulated, yeah, but they're not the government, right? So when the actual government of Japan and the actual government of South Korea says, hey, we're planting our flag down and we're saying we're cool with crypto and please market it. We know it's good for the future of the economy. Somehow we'll figure it out. Even if we're not exactly sure yet, we can see a plan that's good and we can figure out ways that work. And that's forward thinking. Right now, we're not seeing that much in the US, unfortunately. We are seeing it in some places. We saw it in Wyoming. It's been reported that the cattle and the sheep industry are going to be developing or running their own tokens. Right? They're going to be basically running their blockchains in order to manage. Here we go, Wyoming. In order to manage, I guess, livestock or the business and the industry of beef and sheep, whatever that is, lamb, cattle and sheep. I guess they have a lot of that out there, and they need to manage that. And blockchain is a significant improvement on the existing systems that they have to run their meat industries. And obviously Wyoming is very meat industry driven, right? It matters a lot out there. The cattle industry, the herding industry, all that stuff, the meat industry. So the Wyoming Blockchain Coalition basically has lobbied, I guess you'd say somewhat successfully already. The U.S. state of Wyoming has therefore passed two bills, to help foster the development of a blockchain in Wyoming. And this is really terrific news, right? This is like right smack dab in the middle, United States. You've got a very forward-thinking state, and it is not necessarily one, I think, that would have been predicted by most techno observers, right? Tech observers, crypto observers, even. Out of nowhere, kind of. Like, we know there's activity there, but to come out and be one of the first states to actually adopt legislation to advance the interests of blockchain is terrific. And way to go, Wyoming. Hats off. Big cowboy hats off. Just like the guy on the horse here in the picture. So that's good news, right? Those are three good news stories, and we haven't even gotten to the end, right? We still have this, but it's FUD. The St. Louis Federal Reserve says that an increased supply of altcoins will decrease BTC's value. Hogwash. That's what I say. This is my opinion. This is all my opinion. Right? None of this is advice. This is me telling you what I think, and that's it. So, yeah. About marketing, when you look at this kind of comment, this kind of story coming from the U.S. St. Louis Federal Reserve report, right, declaring definitively that an increased supply of altcoins will decrease Bitcoin's values, that just demonstrates to me their fear of crypto. Why do I say that? Well, if you don't fear crypto, then you have no reason to think that an added number of coins will necessarily decrease the value of one specific coin, because the marketplace is bigger than one coin. So by definition, right, anything that the market grows into, the more it grows, the more coins there will be. The value of Bitcoin is the value of Bitcoin. It's determined by the marketplace's support for it. That is not necessarily tied to the market of other coins, because yes, you may have your investments tied together through bots or just smart, careful management or whatever, but that doesn't mean necessarily that you're going to be tying together all of your cryptos to your Bitcoin investments. And you don't necessarily invest in other assets related to how much you tie into Bitcoin, right? So you might decide this year you're going to invest more in bananas and furniture stocks, and therefore you're going to spend less on Bitcoin, but it has nothing to do with your altcoin because you're not touching altcoin this year. So that reduces the value of BTC just as much as if you put it into altcoins. So it's a completely FUD article, completely FUD, well, not article, it's a completely FUD report that was reported by Adrian Zmudzinski, I hope I'm pronouncing that correctly, on Cointelegraph. And it's a ridiculous supposition to suppose that because you have more assets on the market, one other asset is going to go down. Like, those things are not necessarily correlated, right? Bitcoin has demonstrated the non-correlation very clearly, and so have other cryptos, the non-correlation between what happens, let's say, on traditional stock markets and what happens in crypto. There isn't a correlation. If you can find one, please demonstrate it, because analysts, solid analysts, have not found one. They've demonstrated it is not there. And that's the same thing for altcoins. Yes, altcoins impact the dominance of Bitcoin. That is obvious. They will always they will always impact the dominance, right? That is the nature of sharing the market space. Okay. I'm taking a breather here because it's sometimes hard to find the right words when you've been looking at this for so long, for so many years, on and off, and then more seriously over time, you know, and then you get to a point where you've done all this research and you try to explain the marketing insights to people who just don't get, the depth, right, of what the story arcs have to be for all of these coins. It's not by accident that certain coins have had a positive trend over the years and certain coins have disappeared. And when you see FUD articles like this that attack the main leader of the coin economy, the crypto economy, it's not a surprise that somebody who is pegged to the old establishment way is looking for ways to minimize the value of Bitcoin by saying that even smaller and more insignificant assets are able to damage the leader of the industry and therefore the entire industry itself. That is a ridiculous supposition. That's like saying when Ford invented the first factory developed car that having other, after, and then another one or two others, came along the line that then having 4 or 5 cars manufacturers would necessarily devalue Ford, right? It's just preposterous. Like, Ford grew insanely after there were 4 or 5 or even 10 car manufacturers around the world, right? Mass factory car manufacturers. They didn't stop growing. Maybe they didn't grow as fast as if the entire market would have gotten into Ford the same way it got into cars, but they didn't because they got into cars by the fact that there were other companies. Ford wouldn't have been capable of handling by itself the entire market of growth, right? They wouldn't, they would have scaled in a different way. They would have had a different history. They would not necessarily have scaled at the same rate or size. And you can say the same thing about any other industry and asset. McDonald's as a fast food chain would not have been able to scale to the size it was had there not been other competitors that spurred it onwards for growth. You could argue that the fact that there is competition is good for the value. Like, as the dominance went down of Bitcoin, the price shot up, right, in 2017. And then, and bounced around back and forth this year and sits around 50% now. It used to be 95%. People say, yeah, because there were no other coins. It's a ridiculous supposition to say, how could Bitcoin go from 95% to 50% dominance? Well, you have thousands of coins, and that means that there's a demand for them. Whether or not you like a particular coin or not is irrelevant. Somebody has bought into that line of reasoning and decided to support those coins that are on the market. And that's a good thing. So when you see this kind of FUD story, if you're a crypto investor, marketer, or whatever, keep in mind, these are coming from severe political interests and fears by institutions. And I'm not here to bash on the institutions or anything, right? I mean, they do what they do. They do what they think is right. But you can see what they think is right. And what they think is right here is that there shouldn't be competition. There shouldn't be anything able to stand in the way of the central banks, basically. And they do it by negging, by dissing, by whatever you want to say, slice out of the way. Hack slash, it's gone. Now here you got an interesting point. Did Google blacklist Ethereum ads? Right? Crypto firms are reporting that they have been basically unable to run ads for Ethereum. There's a company in Serbia that figured out not long ago, some days ago, last week, that Google was not showing ads running anything to do with Ethereum in their target regions. There's a whole back and forth about whether or not Google is actually blocking Ethereum or any other thing related to cryptocurrency. Turns out, as it's an emerging market, Google won't definitively give us an answer, of course, but what they've hinted is that, they don't have a crystal ball. It says here, Google exec Scott Spender says, we don't have a crystal ball to know where the future is going to go with cryptocurrencies, but we've seen enough customer harm or potential for customer harm that it's an area that we want to approach with extreme caution, right? So again, Google is all about marketing and ad revenues, right? So they're not stupid, they're brilliant. And as a very valuable company that's built a tremendously valuable company, they have done it by using smart marketing and ads, right? So they understand very well, the upsides and downsides, the potential risks of running certain crypto ads, and they don't want to position themselves in any way. Remember, they take a lot of money from the government, right? They work with all the All the agencies basically have contracts with them, including the hush-hush ones and the non-hush-hush ones. Many different agencies have special Google interfaces, in fact, right? So they see unique data that you don't normally see when you search in Google. That, you know, Therefore they have business interests with the government. Therefore they don't want to do anything that might upset those contracts. It's kind of obvious, like it's pure business. Um, and as such, they want to make sure that they don't just run anything here and there, willy-nilly. Kind of the same argument that Coinbase used for years for not posting all those different cryptocurrencies available for trading, and they're still extremely limited compared to any of the other exchanges, right? The big ones anyway. And that's the same for Google. They're taking the same approach. They're just going to pick and choose very carefully. They might get left behind by the market, but they don't seem to care about that at the moment. Maybe they'll change their tune, maybe they won't. My guess is, their blockchain team is diligently hard at work building something extraordinary, whether you like it or not. And they'll be more than happy to wait for Facebook to do their little launch. Maybe they'll surprise everyone and come out sooner, but probably they'll just wait for Facebook, who's already made their big announcement. Once Facebook's coin launches, Google might do an also ran. Maybe they'll have a unique use case. Maybe they're trying to avoid doing what they did with Google Plus and not just have another useless thing that no one needs because they already have the one that they already use. Whatever the case, don't expect too many crypto ads on Google. But that said, I personally see tons of ads on Google for crypto, so I don't really know why this story is such a big deal, other than to say it is getting some decent coverage. Not too many shares, though. Well, it is a weekend. So if you're interested, you can read about that on CCN, where the story ran. There's also a quick story to look at here on Coin Central about the FinTech articles. I'm not going to read this whole thing for you or anything. I'm really not going to even surmise it for you. But I will say this is very worthwhile. And if you are interested in not just blockchain, but how it affects things like the FinTech industry, you should absolutely take a look at this article right here on coincentral.com/fintech-blockchain. And there you can read the entire article. It's a good overview and definitely worthwhile if you're not too familiar with FinTech and you want to learn some of how it relates to blockchain. Let me just say about this article and about the topic in general that FinTech stands to gain massively as a result of blockchain. And that's why you're seeing literally every leading bank in the world getting into it one way or another. And I don't even mean if they're buying Bitcoin, and that's irrelevant, that's like investments and whatever. I'm talking about actually inside the banks developing their own blockchain for internal uses and for external uses, and improving their efficiency and effectivity and profit ratios and all that stuff, all their metrics. They are hard at work figuring out how to use blockchain to the best of their ability and for their best interest. And that should tell you enough right there that all the banks where you keep all your fiat, they are putting massive amounts of money, millions and billions, into figuring out the best ways to exploit blockchain. Like, if that isn't enough to tell you that being a marketer of blockchain is a very strong opportunity right now, I don't know what is. Investor, whatever, this should be very obvious to you. Like, banks don't just make investments like this for no reason. They do this obviously because they want to make a ton of cash. So that should give you enough of an indication. Again, we are at 1 or 2% market penetration with blockchain and crypto globally. 1 to 2%. That's nothing, right? 100 million people, let's call it. We're still roughly there. That is not a lot of people. out of 7.5 billion people on the earth right now. That's just nothing. So take a look at that again. Investor in other coins as well and other projects. He is basically coming out again, giving another article. You know what? He's a maximalist, so it's not really, it's kind of weird. It's not very newsworthy, right? I mean, it's always good content. It is great content, but there's nothing really there that he's saying that's new. So as much as I love crypto and blockchain and stuff, I think that when you have a massive podium like that, yes, it's good to beat the drum and repeat it. He's absolutely right to do it. But it also means that you have to be, how do I say this? Making insights and making inroads, right? You have to not just be saying the same story over and over and over again. This isn't a political campaign. I mean, in some sense, you could argue that, but you want to tell people a storyline that develops. It doesn't just stay the same over and over again. Obviously, if it stayed over and over again the same, it would only grow to a certain point. That's why it needs to grow. And to just kind of always say we're at the beginning, and that it has a positive upside, that can be your general theme, but there's no news there. I have no problem with Tim Draper. I think he's great and it's wonderful. He says whatever he says. Like, really, I do. But I think it's weird that CoinDesk would publish a story like that. And it's weird. Like, if you're going to publish news. That means something that is, interesting and not something you've already reported 100 times in one way or the other. That Tim Draper says is an upside to Bitcoin. We know that. That's his position. If he ever says there's not an upside to Bitcoin, that would be news. Or if he says there's an upside to Bitcoin and it's going to happen in this particular way, okay, maybe that would be interesting, right? But for him to just say his old theme, I mean, just play the Star Spangled Banner or whatever patriotic song he wants to play that, it's not newsworthy, is my point. Anyway, don't mean to bash on CoinDesk or anything. It's just, I find it weird sometimes when media post stories that aren't really newsworthy. And there I am talking about it on my YouTube. Dang it. Oh well. The irony, people. A&B Crypto, who has been in the past, just like any other, well, I'll get into that. A&B Crypto reports that Japanese Bitcoin miners are migrating to Mongolia for cheaper electricity. That's really not surprising. If you're a Bitcoin miner, you know the value of electricity greatly affects the value of your Bitcoin haul, because you have to pay your electric bill unless you're generating your own electric, but you still have to invest in doing that if you're going to do that. So either way, you're spending money on electricity in order to mine Bitcoin. And logically, if you become a significant size company, you're going to want to move your facilities to where you get the best deal with your electricity, right? So it makes perfect sense that Japanese Bitcoin miners are going to go to Mongolia, where they have cheaper electricity than in Japan. There's really nothing surprising there. What may be newsworthy in this context, possibly, is that it shows how undeveloped the thinking is in the electric companies of the developed world. Rather than doing everything they can to keep this company in their country, mining Bitcoin and keeping the wealth within Japan, roughly, or, in a Japanese company, they just let them go. Instead of incentivizing them to use green energy or to figure out some other way to keep them in the country happily, they just tell them, no, you want to take your business and go elsewhere, that's fine. That is just absolute folly. Because if Japan, which supports crypto, as we've discussed earlier, believes in crypto, which obviously it does because they said it's okay to trade it on exchanges, why would they want the people who are generating that asset to not be in their country? It makes no sense, right? It speaks volumes again to the political interest of whatever's going on. I'm not going to talk about what the political interests are because I don't care. It's just that's the reality. It's obviously political. You don't let a wealth generating company leave your country just out of hat because it's too expensive to give them the electricity they need to make the wealth. That's just ridiculous, right? So what? They couldn't cut their prices in half or in 2/3, make a special exemption for Bitcoin miners because the future investment value of it is, they obviously believe in it as a government. And if they don't, then why not incentivize them with something like solar power or wind power or a combination or water power or anything? Anything. There's so many alternative energies that they could use. No, just let them go. So that's and it's very telling. It's very telling that this happened not just in Japan. This has happened in the United States. This has happened in the UK. This has happened, in across Europe and Germany and France. There's no shortage of countries that are letting go the best and the brightest because they're just too Stone Age mentality with their view on what should and shouldn't be allowed. Like on the one hand, they say they support crypto and blockchain. On the other hand, they stifle it and kick it out of their country. And the part they're kicking out of the country is the part that makes it. Well, don't expect the people that reject the makers of the blockchain to be the biggest winners in the future. If all of the blockchain creators decide, or even a significant portion of them decide to leave the established industry-leading countries and go to countries that are currently second or third world economies, those second or third world economies could easily become first world economies in a blockchain future if all the talent goes there and all the wealth goes there. So beware, first world nations, what you do when you kick out your blockchain leaders. The builders, that is. And then finally, I'm just going to really quick go over this. Bitcoin trading volume increases exponentially in Colombia, Venezuela, and Peru. Yeah, we've heard about this a lot. I've spoken about this in the past, and I've shown you a graph in the past that showed you the accumulated increases. Now you can see here very nice and neatly, again, an updated graph. The last line here is the first week of January, right? Or first 9 days or something like that. First week. And you can see that's about half of what it was at the end, like a week or two before that, the end of 2018. So, but in general, you can see this is a growth trend line, and there are up and down weeks all along it. So it's not that surprising that it came down a bit after it went like that. But this is Venezuela. Use of blockchain, right? Comparing the weekly volume January 2017 to January 2019, you can see the weekly Bitcoin volume increased from a mere 135 Bitcoins to 364 Bitcoins. However, the BTC trade weekly trade volume reached a maximum of 759 Bitcoins in the last week of 2018. Right, so again, double roughly the price and the volume, not the price, the volume. And you can see the same thing roughly for Colombia, right? Yeah, and for Venezuela and Peru, right? So, yeah. So you can see here on the Peruvian graph again, it has gone up from January 17, it was 17 BTC. The volume has risen to 190 BTC in the first week of 2019. So Peru has shot up 10x, even more, in terms of volume. Now, it may seem like very insignificant numbers if you're sitting in the US and you're trading in whole Bitcoins even, right? Or even tenths of Bitcoins or whatever. 190 Bitcoin for a whole market seems like nothing for a whole country. But it's Peru. It's a very small market. So to say that it's not a thing, this is a significant growth. And this is a significant growth, right, for Venezuela, right, in Colombia. So we are basically looking, yeah, this is the Colombian one. Sorry, this is the Colombian Bitcoin graph. I misread that earlier. This is the Venezuelan one. And this is the Peruvian one. So you can see right here on AMB Crypto, they covered this volume. I would say the more interesting story arc here, okay, again, more than the charts themselves, the fact that the charts are moving this trend means that the story arc is growing in South America, that crypto is a solution for South America. Right? It's not an accident that South America is going up like this in the last year. It's not, they're seeing more and more devastation as a result of their poor political leaders. And they're seeing that their only solution is to store their own wealth securely on their own systems, move their money effectively into their own private hands, and not rely on their centralized systems that so far have demonstrated zero ability to maintain their fiat value in the past years. So that's the strong marketing use case and story arc for South America right now. And it is actually probably the most important one happening in the world today. We are seeing people buying up as much as they can in some of the most impoverished places on earth, some of the most poorly politically led places on earth. And we're seeing them do everything they can to get as much crypto as they can because they know, the ones who are fortunate enough to know down there, that it can help them in the future and it can help them now, right? They can actually use it to buy and sell things without having to worry about the value falling millions of percent or even hundreds of thousands of percent. Bitcoin lost 80% last year. That's terrible. 90%, whatever. It's terrible. Yeah, the Venezuelan Bolivar, or whatever it's called there, lost how many hundreds of thousands of percent last year? 5 years ago, $1 million worth of Venezuelan money is worth less than like $1 today or something ridiculous. They're basically like Zimbabwe, right? Where hyperinflation, no one can afford anything unless they're rich, and everyone's poor. And it's not fun, so they see this as a real solution to their horrible, horrible lives. And that shouldn't be understated. That is one of the strongest marketing use cases. And if you look back and you know your history, you'll know that that's actually one of the ways that the mighty United States dollar made its rise. It became the petrodollar reserve currency because it had the story arc of being the money of what was at the time considered to be the freest nation on the face of the earth. But of course, the United States is not the freest nation on the face of the earth anymore. I mean, I love America. I will always love America. It's awesome. But to claim that it's the freest nation on earth is just absolute false. And so you see people who are living in disaffected places, who are living in repression and who are living in political, oppression, being pushed down by their so-called leaders. You're seeing them do everything they can to maintain as much freedom as they can. Cryptocurrency is the next form of financial freedom. You may not believe in it, but then again, you probably have running water. You probably have electricity whenever you want it. right? You probably have a local government, if you're listening to this anywhere in Europe or the US or Asia, where, like in Japan, let's say, or South Korea, those countries, you probably have, you know, whatever you need whenever you want it and whenever you need it. More importantly, you probably don't live in a revolution or an armed struggle right now if you're listening to this, right? But if you are listening to this from a place that is horrifyingly bad, well, first of all, hi, and feel terrible for you, and I hope things get better for you quickly, ASAP. More importantly, also, let us, stay safe. And hey, if you also want to, tell us down, in the comments if you can, if it's safe or whatever, right? And think about that. I have to consider telling people who listen in repressive regimes to think about staying safe if they post a comment. Don't post one if you live in a country that monitors your internet action and all that stuff and will punish you for saying things against your government. If you live in Canada, the US, England, whatever, you say whatever the hell you want. No one's going to do anything about it, right? But if you live in one of those places where those cryptos actually, they could be the difference between life and death, between being able to afford a medical procedure or not, or medicine or not, or food or not, or whatever. Right? Crypto is not a game. Blockchain is not a game. This thing is not going to go down just because some investors or some governments or some institutions don't like it or don't have enough of it yet or haven't figured out the best way to exploit it yet to their advantage. I'm sure they'll all figure that out. They're smart people, they'll all figure that out. Right? But the story arc, which is frankly more important than the marketing story arc, the real historical story arc of Bitcoin and blockchain, is that this isn't going away anytime soon just because some people don't like it. It is just beginning. And the way it's going to do that, and this is always the newsworthy part, is it's going to continue to develop new and amazing marketing angles. That's the only way it's going to get through to everyone and everyone. Dash figured out how to market in South America by enabling crypto without having to be connected directly to the internet or via a smartphone. You can now send Bitcoin via SMS. If you're sending, you can send Dash coin if you're sending via SMS. Yes, technically, again, SMS technically connects to the internet. You're sending a text message, essentially. But it's a very, very basic connection, and it's not like an internet connection. You can send it over a cell phone connection. You don't need to actually dial into an IP server and everything else. You just send it over the cell phone system, and the cell phone sends it to the recipient. However it does that, which is another topic. But the point is you don't actually need internet to send crypto, which means crypto really is a future currency because it's not limited to one medium. Therefore, it is just as valid, if not more, than any other form of money you've ever known. Right? Cash is limited to one medium, physical. Credit cards are limited to one medium, digital. Right? You can give people paper coupons or discounts or rebates or whatever. You can give them money back essentially on paper for their credit card in a weird way, but nobody does that, or very few, and it's certainly not the most common use case. The most common use case of credit cards and debit cards is you swipe it, or you stick it in a machine and you get back physical money. Those are all old solutions, and people in South America, as we can see in the last year or two, have gone from basically not doing any action in crypto to going bananas over crypto. I don't mean to offend anyone. If you think bananas is rude, sorry. Going nuts, going trading a lot more. Look at this graph. It's not an accident. So keep that in mind. The marketing angles for crypto and blockchain are growing despite what everyone says about the prices or the future or this and that. There are more people working in crypto and blockchain marketing today than there ever were before. There are less campaigns necessarily going on right now in terms of volume of the campaigns, frequency of the campaigns. That's natural when your market cap is down 90% from its previous high, and people were spending money like idiots back then. You now have much more reserved and forward and smarter thinking marketing happening, and that's good all around. So personally, I think this is a great time for people to be in blockchain marketing, in crypto marketing. And of course, if you have any questions about that, drop us a line at yashaharari.com. Check out our site. Give us a hoot. We'll be in touch with you. We'll be pleased to work with you on your crypto or blockchain projects. But apart from that, just, if you like this video, click the little like button, or of course, click subscribe if you want to get notified about the upcoming events and videos. And until next time, I just want to say, you know what? Break it up today and take care.